Okay, so good day. For today, we're going to discuss about stock market and industrial analysis. No? Uh, the stock market is a platform no, where investor buy and sell shares of publicly listed companies. And this shares represent ownership in a company, and investor trade them in hopes of generating profit based on the company's performance or market conditions. So stock exchange, like the New York Stock Exchange, Philippine Stock Exchange, or facilitate this transaction, no, providing a regulated environment for trading. So the stock market plays an important role in economic growth by enabling companies to raise capital for expansion and innovation while offering investors the opportunity to participate in their growth. No? Several key players operate within the stock market, no, including individual investors, institutional investors such as mutual funds and pension funds, and market makers who provided liquidity, no, by buying and selling stocks. No? In addition, companies themselves now participates by offering initial public offerings, no, or secondary offerings to raise funds. Governments may also participate through regulatory bodies, no, like Security Exchange Commission, to ensure transparency, fairness, and efficiency in trading practices. To give us more details about the topic, let us all welcome our presenter. Go ahead.
Hello, good afternoon, everyone. So
Good afternoon.
this is the topic 9, which is the stock market and industry analysis. Okay. So the contents of my report will be the macroeconomic analysis, industry life cycle and analysis, competitive forces and industry structure, and last is the sector rotation strategies. So first, the macroeconomic analysis is the study of the behavior of the economy as a whole. So this is different from microeconomics, which concentrates more on individuals and how they make economic decisions. So while microeconomic looks at single factors that affect individual decisions, macroeconomics studies general economic factors. So macroeconomics is very complicated with many factors that influence it. These factors are analyzed with the various economic indicators that tells us about the overall health of the economy. So macroeconomics try to forecast economic conditions to help consumers, firms, and governments make better decisions. So first, sa consumers want to know how easy it will be to find work, how much it will cost to buy goods and services in the market, or how much it may cost to borrow money. Yung firms or yung mga businesses use macroeconomic analysis to determine whether expanding production will be welcomed by the market. Will the consumers have enough money to buy the products, or will the products sit on shelves and collect dust? And last is the government use macroeconomics when budgeting spending, creating taxes, and deciding on interest rates and making policy decisions. So macroeconomic analysis broadly focuses on three things. Yung national output, which is measured by the gross domestic product, the unemployment rate, and the inflation rate. So let's go first to the GDP, or the gross domestic product. So output, the most important concept of macroeconomics, refers to the total amount of goods and services a country produces. This figure is like a snapshot of the economy at certain point in time. So makikita natin dito sa slides yung year-on-year growth rate from Q1 of 2018 to Q2 of 2024. So mapapansin natin medyo nag-down siya. Ito yung during ng kasagsagan ng pandemic. So the Philippine gross domestic product posted a growth of 6.3% in the second quarter of 2024. Yun. So once the series of figures is collected over a period of time, they can be compared, and economists and investors can begin to interpret the business cycles, which are made up of periods alternating between economic slumps or economic recessions and expansions that occur over time. So from there, we can begin to look at the reasons why the cycles took place, which could be government policy, consumer behavior, or international phenomena, tulad nga nito yun sa 2020. So of course, these figures can be compared across economies around the world as well. We can determine which foreign countries are economically strong or weak. Based on what they have learned from the past, analysts can then begin to forecast the future state of the economy. It is important to remember that uh, what determines human behavior and ultimately the economy can never be forecasted completely. So next is the unemployment rate. The unemployment rate tells macroeconomists how many people from the available pool of laborers or the labor force are unable to find work. So unemployment rate in the Philippines decreased uh, to 4% in August from 4.7% in July of 2024. The unemployment rate in the Philippines averaged 7.94% from 1986 until 2024, reaching an all-time high of 17.6% nung kasagsagan ng yun nga nung nag-lockdown in June of 2020, and a record low of 3.10% last December 2023. So macroeconomists agree when the economy witnesses growth from period to period, which is indicated in the GDP growth rate, the unemployment rate levels tend to be low. This is because with rising GDP levels, we know the output is higher, and hence more laborers are needed to keep up with the greater levels of production. So next is the inflation. The inflation is the general increase in the prices. It means an increase in the cost of living as the price of goods and services rise, and thus decline the purchasing value of our money. So sa sa slides makikita natin yung inflation rates in the Philippines from September 2023 to present. So inflation basically means that our money won't buy as much today as we could yesterday. So if the prices of goods rise, like for instance, nag-grocery tayo, so with the same amount of money, mas kokonti na yung mabibili natin dun sa money natin kumpara sa nakaraan. So habang parang lumiliit yung kakayahan ng pera natin na makabili ng mas madami. So yun. Pero dito sa graph na nasa slides is 1.9% yung inflation rate ng September 2024. So the next topic is the industry life cycle and analysis. So industry life cycle analysis is part of the fundamental analysis of the company, involving the examination of the stage an industry is in at a given point in time. So understanding these stages can help investors identify potential investment opportunities and risk. So ito yung industry life cycle. So the introduction phase, the growth phase, maturity phase, and the decline phase. So the introduction or the startup phase involves the development and early marketing of a new product or service. So, yun. Syempre, dahil startup pa lang siya, low sales and high cost, ito, there is also a high risk of failure. And yung investment opportunities dito is companies with strong competitive advantage and innovative products will stay. Ayan, tapos, next is the growth phase. Dito, nakilala na yung product and there is a rapid increase in sales and market share. There is also a growing customer base and an increasing competition. So investment opportunities, so yung mga companies with strong brand recognition and efficient operations, yun yung best for investments. Third phase is the maturity. Sales growth begins to stabilize and there is still an intense competition, price wars, and product differentiation. And the companies with strong market share, cost advantages or innovative products enhancements will remain. And yun din yung mga best for investments. The maturity begins with the shakeout period, during which sales growth slows down, focuses shift on expense reduction, and consolidation occurs as companies begin to merge or acquire each other. Meron din kasing mga companies na yung maturity phase is napoprolong kasi nagdadagdag sila ng innovation dun sa product nila. And businesses may prolong the maturity phase by repositioning their offerings, investing in new markets and technology, and sparing new growth. So, example ng mga maturity phase, ito yung mga Apple, Xerox, Intel, IBM, Procter & Gamble. Sa decline stage naman, this marks the ends of an industry or business abilities to support growth. So the sales decline due to technological advancement and changing consumer preference or increased competition. There is also a reduced profitability ng business. The companies that can successfully pivot to new products or markets, yun yung may yun yung best for investments. This creates margin pressure, forcing weaker competitors out of the industry. Considering investing in companies that can successfully pivot to new products or focus on dividend paying stocks. So para saan ba yung industry life cycle? So analysts and traders often use industry life cycle analysis to measure the relative strength and weakness of a particular company's stock. So the company's future growth prospects may be bright or dim depending on the stage that it is in during an industry life cycle. So the Porter's 5 economic forces change as the industry matures. So i-discuss natin later yung Porter's 5 economic forces. So by understanding the industry life cycle and analyzing the factors that affects it, investors can make more informed decisions about the investment choices. So the third topic is the competitive forces and industry structure, a model that identifies and analyzes 5 competitive forces that shape every industry and help determine an industry's weakness and strength. So first, yung competitive rivals. So the level of competition among existing firms in the industry. Factors that influence the intensity of the rivalry includes, first is the number of competitors. So the more competitors there are, the more intense the rivalry is likely to be. Second is the product differentiation, which is the degree to which products are differentiated. Industry growth rate, a declining industry can lead to more intense competition as firms fight for market share. So in declining industry, the competition can be ferocious as firms fight for a larger piece of market share. Tulad sa print media industries, 'di ba medyo hindi naman na tayo nagbabasa ng dyaryo, hindi na tayo bumibili ng mga mga magazines. So usually kasi nasa internet na siya. So pwede ka na magbasa ng news doon. So ito yung example ng mga declining industry natin sa ngayon. Tapos exit barrier, difficulty in leaving the industry due to various factors. So halimbawa, when companies have difficulty in leaving the industry due to specialized assets or contractual obligations tulad ng airline industry. Airlines have high costs for their assets. Siyempre, yung pagbili ng mismong eroplano. Contractual obligations, yung mga leasing agreements nila and labor contracts. And also the regulatory requirements, which means that when airlines face a shrinking market or even an unprofitable route, they can't retreat from the market quickly. So next force is the potential for new entrants in an industry. The potential for new competitors to enter the industry and reduce the profitability. The first factor is barriers to entry. Economies of scale, these are the new firms would need to achieve a similar size to compete on price, which might be difficult or costly. Halimbawa, kung sasabihan nila yung mga malalaking company, so they have to produce din na similar size, a similar volume ng product para makasabay sila dun sa price. Next is the capital requirement. High startup cost for equipment facilities can deter new entrants. For example, yung starting a new car, for example, starting a car manufacturing business requires significant investment kasi yung machinery, yung warehouse, ayun, medyo malaki yung capital na kakailanganin. Next is the government regulation. So, eto nga, every business must comply with licenses, safety standards, and other regulatory standards that create barriers dun na nga sa mga nagbabalak na pumasok sa business, making it too ungainly or costly for new firms to enter the market. Last is the brand loyalty. When customers show a strong preference for products or services offered by the existing companies, it becomes challenging for new entrants to gain market share. Second factor is the expected retaliation. So this is the potential for existing competitors to retaliate against new entrants. So halimbawa pag may darating na new competitor, gagawa na sila ng parang marketing strategies, gagawa ng mga promotions, ganyan. So para maka-cope up sila, how will the existing competitors will react dun sa pagpasok ng bagong business. Next is the supplier power. The ability of suppliers to demand higher prices or reduce quality. So first factor is the number of suppliers. So the fewer suppliers there are, the more bargaining power they have. So best example nito is si Meralco. Di ba wala naman talaga siyang walang ibang competitor si Meralco dito sa Greater Manila area. So wala tayong choice kahit taasan yung presyo niya, tatangkilikin natin. Next is the switching cost. The cost associated with switching to a different supplier. So halimbawa nga doon, walang direct competitor si Meralco, pero may substitute, may ibang product na pwede natin tanggapin. Halimbawa yung solar, ito yung switching cost, medyo mahal kasi yung pag-switch natin sa solar base na electricity. And wala tayong choice kundi i-retain na lang natin dahil mataas nga yung presyo nung pag-acquire ng solar. Okay, next is the product differentiation. Unique or highly differentiated products give suppliers more leverage. So, yun. Next is the customer power. This is the ability of the customers to negotiate lower prices or demand higher quality products. So, yung unang factor is the number of buyers. The fewer buyers there are, the more bargaining power they have. So, ibig sabihin nito, halimbawa is yung sector like sa aerospace manufacturing. So, syempre ang clients niya, si aerospace manufacturing, sila yung gumagawa ng mga eroplano. So, sino ba yung magiging buyers niya? Syempre, yung mga airline companies. Halimbawa, sila Cebu Pacific, ganyan. AirAsia, and ayun, Philippine Airlines. So sila yung magiging target market nung aerospace manufacturing. So kokonti lang, hindi naman lahat tayo bibili syempre ng eroplano. So walang choice si supplier, o which is yung aerospace manufacturing, kundi sumunod kung ano yung gusto ni customer. So they can demand favorable terms because the seller depends on the business of the airline company. Product differentiation, when products are not highly differentiated, buyers have more options and consequently more power. So yun, so parang sa ano, right, kapag nasa customer pa rin naman yung choice kung mag-i-stay siya or mag-iiba na ng product. Availability of substitute. The presence of numerous substitute products in the market strengthens the buyer bargaining power. So yung last force is the threat of substitutes. The potential for customers to switch to alternative products or services. So relative price performance, if the cost of the substitute is lower and its performance is comparable or better, the customers are likely to switch to substitute. So halimbawa, yung streaming services like Netflix became a substitute for a traditional cable TV. So mas mababa na yung price niya, patas parang ngayon 'di ba, parang it threatened the cable industry. So hindi lang Netflix, 'di ba, madami pang streaming services na nag-e-exist ngayon. Next is the customer willingness to go elsewhere. The threat is high if buyers find it easy to switch to a substitute. So, magandang example na ito yung pag-switch ng mga tao. Lahat tayo are from switching from taxis, the ordinary taxis, to ride-sharing apps like Grab. Kasi cheaper na siya, easier pa to book. And ngayon nga, mas nagbo-boom na yung mga angkas, 'di ba, yung motorcycle ride sharing app, dahil mas mabilis kang nakakapunta sa destination mo. So investment implications. So the industries with high barriers to entry, low bargaining power of buyers and suppliers, and limited threat of substitute products are generally considered more attractive for investment. The competitive advantage. So we have to identify the companies with strong competitive advantage that can help them outperform their rivals. So we have to look for firms with unique products, strong brand recognition, and cost advantages. Also, we have to evaluate the risk associated with investing in an industry with intense competition or high bargaining power of buyer and suppliers. So by understanding the competitive forces and industry structure, investors can make more informed decisions about their investment choices. So, yun. Yung fourth topic is the sector rotation strategies. So sector rotation is an investment strategy that involves shifting investment between different industry sectors based on economic conditions and market trends. So the goal is to capture gains in sectors that are outperforming while avoiding sectors that are underperforming. So ito yung mga list ng sectors under ng Philippine Stock Exchange. So the financials, under ng financials yung banks, other financial institutions, sa industrial, electricity, food, construction, chemicals, electrical components, and other industrials. Holding firms, property. Sa services naman, ang mga subsectors niya is media, telecommunications, information technology, transportation services, hotel, education, casinos, retail, and other services. Sa mining and oil, tas ETF, equity. So ito yung economic life cycle. So yung una is the full recession. The gross domestic product is retracting quarter over quarter. Interest rates are falling. Consumer expectations have hit bottom. The yield curve is normal. Nevertheless, some sectors continue to perform well. Ito yung cyclicals and transport, technology and industrials. The next cycle is yung early recovery. Sa early recovery, things are starting to pick up. The consumer's expectation are rising, industrial production is growing, interest rates have bottomed out, and the yield curve is beginning to get steeper. So successful sectors at this stage includes yung industrial, basic materials, and energy. Early recovery. Sa early recovery, parang pala. Late recovery pala. Late recoveries, interest rates may be rising rapidly and yield curve is flattening. Consumer expectations are beginning to decline and the industrial production is flat. The profitable sectors at this stage are the energy, consumer staples, and services near the end. Sa early recession naman, the overall economy looks bad. The consumer expectations are at worst and the interest rates are at highest. So yung mga profitable sectors sa stage na to, ito yung utilities, cyclical, and transports, and yung services. So importance ng sector rotation strategies. So sector rotation can be very straightforward at times and other times complex. Investors can moderate their portfolio among two types of stocks, the cyclical and the defensive stocks. So cyclical stocks are assets of organizations that are in communication services, information technology, consumer discretionary, and real estates. So cyclical stocks tend to perform similarly poor during recession. So kapag recession, mabababa din yung value ng mga stocks under ng sectors na to. Ngayon, yung non-cyclical stocks are assets of organizations that have stable stocks during recession. So this includes the consumer staples, healthcare, and utilities. So bakit siya pinaghiwalay? So halimbawa, during recession, sabi dito, yung non-cyclical stocks are stable during recession. While ito namang cyclical stocks naman, it perform poor during recession. So parang pag recession, so dito ka sa mga stocks na under ng healthcare utilities para nag-gain ka pa rin kahit recession niya. Tas kapag ayun nga, pag recession, ibebenta mo lahat ng mga stocks na meron ka under ng communication services, information technology, consumer discretionary, and real estate para hindi ka sumabay sa pagbaba ng value nun. So when the economy is contracting, investors can rotate their investment from cyclical to non-cyclical, which might lose value. And kasi nga, yung defensive or non-cyclical stocks are more stable. So, yun po. Yun lang po. Salamat po. May questions po ba? Thank you po.
Okay, so as what our presenter mentioned, no, the Philippine Stock Exchange is the primary stock market in the country where a share or publicly listed companies are traded. It provides a platform for both local and foreign investors to buy and sell stocks. So the Philippine Stock Exchange platform is an important tool to build wealth through stock ownership. So the performance investor means to build through stock ownership. So the performance of the Philippine Stock Exchange is often seen an barometer for the health of the Philippine economy. The Philippine stock market consists of various participants, including individual investor and institutional investor, stockbroker, and foreign investor. So the government, through the Security and Exchange Commission, regulates market activities to ensure transparency and prevent fraudulent practices. So major conglomerates such as SM Investment Corporation, Ayala Corporation, and San Miguel Corporation are some of the most active traded companies in the Philippine Stock Exchange, reflecting their influence in shaping the market. Stock prices in the Philippines are influenced by several factors, both local and international. So company specific factors such as earning, performance, and business strategies play an important role in price movement. Macroeconomics conditions like inflation rates, interest rates, and government policies also significantly impact the stock market. On the other hand, external factors such as fluctuation in global commodity prices, especially yung oil, foreign exchange rates, and international market trends can also affect investor sentiment in the Philippine market. Just in a global market, Philippine investors use two primary approaches to analyze stocks. Siyempre, meron tayong fundamental analysis at meron tayong technical analysis. Pag sinabi nating fundamental analysis, ito po ay involves in examining the financial health of a company, including its profitability, balance sheet, and growth prospects to determine its value. So, investors in the Philippines often focus on blue chip stocks where are established companies with strong track record. So technical analysis naman po, on the other hand, focuses on price trends and market psychology, and it's common use by traders looking for short-term gains. Industry analysis is critical for a Philippine investor to identify growth sectors and evaluate risk. So the Philippine economy is largely driven by key sectors like real estate. Yun po yung natin, consumer goods, banking syempre, at saka business process outsourcing. Understanding industry trends such as the rise of e-commerce or the impact of government infrastructure projects help investors determine which sectors are likely to grow and which may face challenges. So industry analysis is particularly important in the Philippine setting due to the country's reliance on specific sectors for economic growth. In the Philippine context, Michael Porter's 5 forces framework can be applied to assess the competitiveness of industries such as real estate, telecommunication, and retail. Let's say, for example, yung telecommunications industry, competition is high between major players like Globe Telecom and PLDT, while the threat of new entrants is low due to high capital requirements. So understanding these forces helps company and investor navigate the competitive landscape and make informed strategic decision in the local context. So the performance of industries in the Philippines is often closely tied to the broader economy. For instance, sectors like real estate and construction thrive when the economy is expanding, driven by infrastructure projects and increased consumer spending. So conversely, industries like utilities, telecommunication tend to be more resilient during economic downturns, offering stable returns. But investors in the Philippines often allocate funds based on macroeconomic conditions, aiming to invest in industries aligned with the country's growth prospect. Diversification is a key strategy for managing risk in the Philippine stock market. Now, given the relatively small size of the Philippine Stock Exchange compared to global markets, diversification across various industry and asset classes is important to mitigate risk, such as regulatory changes or syempre yung economic instability. So, Philippine investors also diversify internationally, investing in foreign markets or global assets to reduce exposure to local risks such as political changes or natural disasters. I believe by diversifying, investors can reduce volatility and improve their chances of achieving steady returns. So, Again, stock market and industry analysis is the Philippine setting is essential for understanding market dynamics, identifying investment opportunities, and managing risk. The Philippine Stock Exchange, now with its unique set of participants and market drivers, offers both challenges and opportunities for investor looking to participate in the country's economic growth. Okay, so I think that's it for this topic.